So welcome everyone and thank you so much for joining this week's Small Business Essential webinar. Today's topic is the top 5 things to know about QuickBooks, and I'm pretty sure we're going to get more than 5, hopefully. Um, My name is TJ Daniels, and I'm the director for the Iowa Center's Women's Business Center. The Iowa Center's Women's Business Center is funded in part through a cooperative agreement with the U.S. Small Business Administration. You will receive an email after this event from my colleague Katie Hinches thanking you for attending today's session, information on how to connect to our speaker, as well as the form to complete. Please do us a big favor and take some time to fill this form out. This information allows us to continue providing free educational programming for small business owners in Iowa. Now go ahead and take some time to locate the chat function on your Zoom screens so you could join the conversation by asking questions or adding comments. Also feel free to introduce yourself and your business in the chat and include your website or social media page so we could visit and learn more about your business and network. I also learned how to copy and save the chat recently. So if anybody needs to save the chat, I could show us all how to do that at the end. So now a little information about today's speaker. Our speaker today is Drake Vant Hul. Vant Hul. Hul.
Crazy Dutch last name. You're good.
His name is Drake, y'all. He's amazing. And we can tell this by seeing his hair. We'll have a poll a little bit later to say yes to the hair or no to the hair. You'll be doing a great service for us to vote in that poll a little later. So for Drake, entrepreneurship has been a staple in his life for a long time. From his startup called Ace Auger Machines to cell phone repair business, he started and ran in college. Since then, he's worked to become as valuable as possible to business owners, finishing his CPA in 2018 and continuously searching for ways to help small business owners improve their bottom line. Um, I know he volunteers a lot with us. He helps a lot of our clients with some of those pressing questions that we have. So as always, thank you, Drake, so much for taking your time with us today to share everything that you're going to share. And as of right now, the screen is yours.
Awesome. Well, I appreciate it. Thank you very much. And I'm excited to talk to you guys. And I want you guys to use the chat feature as much as possible. I try to make this interactive. And what I want to say is, hey, you got an hour of a free consultation with the CPA. Take it to your advantage. So like you said, my name is Drake Vant Hul. I'm the owner of Performance Financial. I started this company about a year ago, and really with the goal of helping small businesses in mind. I worked for a large CPA firm, and when COVID happened, kind of put a lot of the smaller clients on the back burner and really focused on the really large businesses. And so I saw a really big need kind of in the marketplace to help out smaller businesses and really make sure that they're getting good advice and good tax planning and good bookkeeping and all those types of things. So you guys get to listen to me ramble for the next 45 minutes on how much fun bookkeeping is and how important it is for your business. And so a lot of you might laugh at some of that, but really I do see this as a huge pressing need in small business and something that can really help elevate you to that next level, outpace what your competitors are doing, and really see some significant growth and from your good data that you're going to hopefully be getting from utilizing QuickBooks. So let's jump right into it. I will give a little preface to this in that I never share client information. And so QuickBooks does give me a sample company to be able to present to you guys. So this is a sample company. I know nothing about this. These are pre-filled in transactions. So it's all fake and made up, but I just want to make sure that you guys are aware this is not any client information that I'm sharing with you guys. So let's jump into it. I'm going to share my screen here a little bit, and then we'll kind of walk you through QuickBooks a little bit. My first question, however, is how many of you guys actually are utilizing QuickBooks, or any of you guys using it right now? And do you have any initial questions? And I'll kind of give you a minute for that. So feel free to put that in the chat. And I think TJ is going to read some of those out. And I'm going to sip on a Mountain Dew. So if you see me doing that throughout, that's what I'm doing.
Okay. So I said I use QuickBooks on my phone. Lisa said yes, currently using QuickBooks online version. Nikki said, I use QuickBooks Online. Marie said, I use QuickBooks for all of our companies. Gina said, I'm using QuickBooks Nonprofit for a remote position from PA. Andrea said that she uses Excel. Um, and someone else says they use QuickBooks Online.
Awesome. Cool. Well, QuickBooks is kind of the gold standard in the industry. It's what almost, I think all of my clients but one use QuickBooks Online. It's fantastic product, and really I recommend it for any small business really under that 10 to 15 million dollar in revenue standpoint. It's going to have really all the tools that your business is going to need if you're under kind of those revenue marks. So we're going to jump into it, and we're going to keep it basic. If you guys got questions throughout, or I have 5 tips here, but if you have questions as we're working through it, feel free to ask them and we can kind of dive into a little bit more detail on those specific questions. So starting out, here's Craig's Design and Landscaping Services. Now, Craig has started his business late in 2021, and he's really hoping to grow, and he's done a good job of recording his stuff. So we're going to get to kind of the nuts and bolts. What's the best starting place? Where are we going to see the most value from this meeting? And I think the most valuable place to start is in the banking tab. So QuickBooks has this awesome feature, which basically makes your QuickBooks act like a bank statement, right? And so a lot of us have been hearing about AI and artificial technology. QuickBooks is really utilizing that in an awesome manner to help you do the basic accounting in a much easier fashion. So essentially all this page is it's a connection. It's an online sign-in to your bank or your credit card or to loans and things like that. And they're pulling all of that information. So typically like once a day or maybe a couple times a day, QuickBooks will just go to your bank account and pull those transactions that are new in there that they don't already have and add them into QuickBooks here. So you can see that kind of below. We're in our checking account for Craig's Design and Landscaping Services. He also has a savings account, and it looks like a credit card. And so you can see, okay, the bank balance, Craig he's overdrawn his account a little bit based on what the bank says. But QuickBooks says we got about $1,200. The reason for that is we have 25 transactions that we haven't actually categorized yet. So you scroll down here a little bit, what you'll see is kind of a breakout of each individual transaction. And really what this looks like is it just looks like your bank statement. So QuickBooks is pulling out each individual line from your bank statement and putting them in here. Now you can see some of these, they say they have a match. Some they say they're uncategorized. You have a few different ones. So we get kind of a variety in here. And you're going to see this, especially when you're starting out your business or even when you're a few months into it, as QuickBooks is learning more and more about your business. So the dates don't really matter. Again, they're kind of made up. So they're not actually 100% accurate, but don't worry about that for right now. So let's start with, just what do we do when we get to this standpoint? What is the first kind of thing that we're going to do? So we can see we have a received category and a spent category. Pretty basic, just like your debits and credits on your bank side. It's going to say, okay, whenever a deposit comes through, we're going to put that in the received category. Whenever money goes out, we're going to put that in the spent category. And all we need to do here is click on one of these and it'll open this up. Now, we see it looks like it's from A1 Rental. It's a backhoe deposit. So it's pulling that information specifically from that line in the bank statement. We can choose what category we want this to go to, what vendor or customer we want it to go to. Typically, if it's a deposit, it's probably from a customer, but we can see that it's actually from probably one of our vendors. They gave us a deposit back. So in a situation like this, all we need to do is go into here and type in what the actual category is for this specific transaction. And this comes really easy. You can look at the bank detail. You can look at your bank statement to kind of figure out some of this, but most of it is going to be pretty basic if we know kind of who our vendor or our customer is to know what type of an expense it is. So I always like to put in here the actual vendor or customer name just so we have good tracking for it. And we can see, okay, well, we don't have a vendor for A1 Rental. We start typing it in here, nothing pops up, right? So we're like, okay, well, we want to make sure that that vendor information's in there. So we simply click Add New. it'll pop up this small little box. I don't like to utilize this because I just don't think it has enough detail in here. So we'll switch it over to a vendor and we'll open up the details tab. In here, you can put in their company name, their address, any notes, their email address, their phone number. A lot of good tools in here to kind of utilize this as somewhat of a CRM for maybe your customers or for your specific vendors. So in here, we're just going to do A1 rental as the name. It populates that as our display name. We don't have their address or their email or their phone number. Again, it's made up. But if you do have that, that can be nice information to put in here. We'll hit save. Now we have a new vendor set up. Now, A1 rental, I don't know what this business is. My guess is this is rental equipment, and it says a rental for a backhoe. So we're going to do just something, equipment rental, something rent pops up. One cool thing about QuickBooks is when you set up your account for the first time, is it'll ask you a series of questions of like, okay, what type of business are you? Are you a service business, or do you sell products, or are you a not-for-profit? Are you a partnership, an S corp, a sole proprietor? It'll ask you things like that. And those are what QuickBooks uses to help kind of develop your chart of accounts of what you're going to categorize your expenses and your assets and liabilities as. So it's a nice little way to kind of get that set up. And go ahead.
Okay, so I personally have a question.
Yes.
So I deposit my own personal money into my business account
Mhm.
to like kind of fund some of the stuff I need to do.
Yeah.
How do you categorize those type of deposits in
Yep.
QuickBooks?
So you can do it two different ways. You could offset it with any money that you've taken out. Typically, we call that distributions. Or you could put it into an equity type account. You could have an additional paid in capital account that you could utilize. Essentially, though, it's an equity transaction. You are taking personal money and putting that into the business. So you would categorize it either as, it's an offset to your distributions account, it's additional paid in capital. Maybe you put it to, there's a lot of the standard QuickBooks account that I see a lot. It's called opening balance equity. Some people like to put it into that account, but essentially it's an equity transaction. The cash has come in and we need to credit some type of account, and we credit our equity type accounts.
And that way it won't be counted as like income.
Exactly. Yes. We want to avoid counting that as income because otherwise we're going to be taxed on it.
Right. Okay, so now here's a question from a client and not TJ.
Yes.
On that vendor setup, it said check for tracking 1099. Is that
Yes.
for me to send or to track if I'm going to get a 1099?
So I'm going to answer that question here in a little bit. That's one of my tips. So that's a great question. We're going to get to it. But yes, hold that in there. And if people don't know what she's specifically talking about, or he or she, when we go add into this detail tab, there is this box down here that you can hit check for payments for 1099. We'll get to this. So hold tight for a few minutes, but we will get to this point, and it's going to be a very important point to help set you up really well for filing 1099s next year. So great question. Okay, back to the banking tab. So this is really the nuts and bolts of this is let's categorize our transactions correctly, right? So TJ had a perfect question there. How does that relate to money that you put into the business? We want to make sure not to call that income because we're going to get taxed on that, or it's not income, right? So if you're doing a not-for-profit, it would not be any donations or anything like that into your charitable organization. So in this scenario right here, and go ahead, TJ.
It says, Chris asks, don't you need at a minimum an email address for invoicing?
If you are invoicing through QuickBooks, you would. Yes. If you are using a different type of CRM to do your invoicing, you do not need to have an email in there. But if you are creating invoices inside of QuickBooks, then yes, I would make sure to add an email address for your customers and really probably get as much information as you can, because if QuickBooks is your CRM, you want to make sure that you have good information that you can go into there and pull up a phone number and things like, or an address for your customers. Those are important pieces to have. Yep. In this situation, we don't have that right now just because of the fakeness of this client. But good point. Yes, I would add in some of that information as well. And you can add that into later. Let's say you want to set up an invoice and you forget to add that in. You can always edit your customer information. We'll get to that here in a minute when we kind of talk through some reports. So this is probably, however, this banking tab is probably 90% of the heavy lifting inside of QuickBooks, right? If you can get this section correct, it's going to make the rest of what you do inside of QuickBooks much, much easier. So we've gone through, we've categorized some of our transactions. We have that kind of figured out. Now we're talking about another kind of cool trick that we can add to this. So again, I talked a little bit earlier about how QuickBooks is using some AI and some learning inside of it. It does this over time as you're categorizing expenses. So here again, we see another transaction from A1 Rental. This is for that backhoe rental. They got their deposit back here, it looks like on the same day. So we know, okay, A1, they are a vendor of ours, and we go to rental equipment is what we are categorizing this as. We've picked that up. We'll add this transaction in there. It's as simple as that. Now that transaction has been recognized, we see here now this line here has been highlighted green. What QuickBooks is saying basically with that is, hey, we're starting to pick up a little bit that when we see a transaction flow through from A1 Rental, or that has some type of in the bank detail that it says A1 Rental, we know, hey, it's probably this vendor. And in the past, this is the category that you have coded that specific vendor to. So we're going to just put that in there for you. So if you're good with this and you've kind of given it a once over, you've seen this time and time again, you can just simply hit add and you're good to go. You know that QuickBooks has learned to do that. Now, perfect segue into kind of my next point is, as you have recurring transactions, QuickBooks is going to pop this up and say, hey, do we need to set up a rule for this to make your life a little bit easier? What rules are really nice for is whenever a transaction comes through that it has picked up that this is the way you've done it for a while, QuickBooks will say, let's set up a rule. And now you don't even have to do this in the future. We will auto add this for you and put it right into QuickBooks for you. Excuse me. So this can be a really nice time saver, especially if you have like one vendor that you do a lot of transactions with that you always code to the same category. This can be a great way to save a lot of time in doing your transactions over and over. So we're going to hit create this rule, and it's going to go through all of these. Now, it doesn't necessarily do it perfectly when it's money received, but for all money spent, it's going to do that really well. Go ahead, TJ. I think you're muted.
Yeah, of course. I was
The
going to say
beauty
it's
of Zoom.
Monday, but it's really Tuesday. I have a current function, memorize. Is this similar?
Ooh, and is that in QuickBooks?
Yes.
Okay. I'm not familiar with that necessarily. The memorize transaction. Yeah, I'm not familiar with that. You know, is that maybe a QuickBooks desktop item?
She said yes. She said when I write a check, I could tell it to memorize.
Gotcha. Yeah, that's more of a desktop item. I don't know if that's necessarily as pertinent in QuickBooks Online. We can test it really quick, actually. Go hit new. We'll do a check. And we can do either make recurring, but I'm not sure on the memorize side if that's a QuickBooks Online piece. That could be when I record this type of transaction for this person, like for this specific vendor that I'm going to write a check to, that it automatically pops up their vendor or their categorization in here. So if we're going to write a check to Des Moines Waterworks, it would automatically pop up utilities in here after you type in the payee information, right? So QuickBooks learns how to do some of those types of things pretty easily. Like I have it with some of my clients where we enter in the bills for them, and just by typing in the payee information when we get the bill, it automatically knows what category to post that too. So if it's an insurance company, if we write a check or take a bill from principal, it knows that it's some type of insurance in here automatically. And then all we need to do is type in the amount. So QuickBooks will learn that from just specifically who your payer is, because for the most part, whoever the transaction is from, there's typically not a lot of variance in the categorization of that specific purchase, right? So if you're buying stuff from Casey's, most of the time it's probably gas, right? Or if you're buying things from one vendor that you buy all your products from, that's maybe all cleaning supplies, you're probably not also buying gas from them, right? So QuickBooks is able to learn relatively easily that, hey, if I use this vendor for two or more things and they're the same, let's just automatically put that type of expense or asset categorization in here right away. So hopefully that answers some of your questions and kind of gets to that. I think it gets to that same point there. So that's really the big piece on the banking side. The rules are very nice. What I typically recommend, the other way you can do rules too is like if we go here and it's the only transaction, you can click down here. There's a button that just says create rule, and it will pop up this tab on the right side. And you can call this rule, whatever the name of the company is. You can apply some little logic to it. One tip that I have found is the description might not always be great. QuickBooks is typically coming up with the description, and some banks do a better job than other banks, depending on which one you bank with. I have a couple clients that their bank gives a really weird bank text and description of the transaction, and it'll be deep in there. It'll finally say what the actual place was. So sometimes I will switch this over to bank text to make it say, okay, if it finds these words inside of the bank text, then it will assign it, as an expense, and it will assign it its category and its payee. So that's a nice feature as well. What I do also recommend too is if you are doing this and you're not completely comfortable with the rules, I would turn off auto add. And what it'll do is it'll act the same as like these matches here. And it'll just say, hey, this is a rule that we've applied. Let's say we do it for Casey's and we buy a lot of gas. It'll say, hey, we see that this is from Casey's. We know that we're going to call it Casey's and that it's going to be fuel expense. And it'll show up as a rule right here. And then you can just simply hit add right over here. But if you're comfortable with it, you feel like the transactions are flowing correctly, then I would just do auto add, and then you'll never have to categorize those expenses again. So that's the nuts and bolts. I mean, this is going to get you 90% of clean financial statements is just doing this and doing this effectively on a monthly basis. So if you guys have questions on this right now, you want me to dive into something a little bit deeper, I can. Otherwise, we can move on to the next topic and kind of the next tip. But this is where if you can get this kind of piece down, you're going to be really successful in doing your bookkeeping each month. Hearing none, I'm going to, oh, never mind. Go ahead, TJ.
And I know this is real quick and real basic. Can you
Yeah.
so say if I bought a piece of equipment, but I ended up doing a check or a money order, like a
Mhm.
cashier's check or a money order, can you just show that really quick? I know it's,
Yeah. So a transaction like that might come, it might just say check. Like here's a good example right here, right? This is a bill payment. But if you bought a piece of equipment with a check or something like this one says check 75. In QuickBooks, it's matching it up because we must have cut the check from QuickBooks. But if you cut the check, just you handwrite a check and buy something yourself without utilizing QuickBooks to input a purchase order and then print the check from that. What I typically do is I would look at my bank statement because I don't remember what a specific check was for. I would look at the check images in either your online banking or from your bank statement, go see who the check was written to, go see, the amount. The amount should be correct in QuickBooks. It'll typically just say check, 1,027, and it won't give any more detail besides just the amount. And so finding the actual check image can be good. You can go, okay, I wrote it to, XYZ equipment company. And then, okay, I bought it, you can think back a little bit to what you actually purchased. So that would be the way you'd record it in here.
yeah. And so I'm saying like maybe even your partner or your parent like cut the check for you to buy the equipment, but you have to track it as an expense. So maybe
Yep.
it didn't even come out of your account. So just to add something like really fresh and new that wouldn't even show in your bank account.
Oh, okay. I see what you're saying. Oh, yeah, yeah, yeah. So two different ways you can go about this. One would just be simply tracking it and creating some type of payable to your parent or to yourself for that. The way I would typically do that is either do a journal entry that says, okay, I owe myself, I paid for it personally, or mom and dad paid for it, and I'm going to get it, pay them back personally for it. You can create a journal entry. You can come into here and do a journal entry, and you can do, you can set up some payable. You can call it a shareholder payable, your name payable, whatever, and you would credit that. And then you could do like equipment, if we had, or like a vehicles account or something, some asset account, or maybe it's an expense account, whatever. And then that's the account that you would debit. That way you're recording that transaction. And in the future, you either need to know that, hey, you need to take money out of the business to pay for that, or you need to pay for it personally, and the business owes you money for that asset. Does that
So
make sense?
within this line or within that entry, you'll be able to credit and then debit, 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 debit every time you make a payment to your parent or your partner.
Correct.
Ah,
Exactly.
okay. That's
Yep.
exactly what I was saying. Okay.
Yep.
So Robert asks, can I link credit cards to my QuickBooks that I also put personal expenses on? And then how would I separate the two in QuickBooks?
Yep. So let's say that this is your credit card, Robert. I typically don't recommend this, and here's the reason why. I don't want you to commingle funds inside your business and what you buy personally. My recommendation would be for you to have a separate business checking and maybe even a savings account and a credit card, just like these are set up here, is kind of the perfect recommendation. And the reason for that is if you commingle funds inside of your business, especially if you have like some type of LLC or a corporation set up, is commingling of funds can invalidate your LLC, for example, right? So you set up the LLC to create legal protection from your personal assets and from the business assets. And if you're commingling funds, a court could say there's really no difference between your personal and your business. And so the LLC is kind of null and void. So if something would happen, they could possibly come after personal assets, and which would totally take away any of the protection that the LLC was set up to enforce in the first place. Now, to answer your question specifically, if you have a business credit card and you're buying personal things on them, let's say this Amazon purchase, actually, it's not a good example. This Lara's lamination, let's say that was a personal transaction. It's not an expense. It's simply a distribution, or looks like we don't have a distribution count. There's got to be some type of equity account that we would put this to. So let's see if we can find one here. You wouldn't really want to put it to retained earnings. Essentially, you'd want to create like a distribution account or an owner's pay and personal expenses account that it's a balance sheet transaction. It's not an income statement transaction where it doesn't create an expense for the business. It's just like you pulling money out of the business personally. And you can code those transactions that way if you do have a card that is mostly business that you're putting some personal transactions on.
Okay, one more question. Please explain the match function a bit more.
Yes.
And you know what? Now that I'm thinking about it, I guess I do use QuickBooks, but I use it on my phone.
Mm-hmm.
And it's really easy where I could almost swipe yes and
Yes.
no. So I know on mine, like if it's not even something that pertains to my business in my account, I'm able to like ignore or something. So it doesn't even,
So
you know,
there is the option to exclude
exclude this. Yes.
this exclude button. I don't recommend that, and the reason for that is when you reconcile all of your accounts, they won't reconcile because these transactions will have no accounting bearing to them, right? So if you look at like a bank statement and you just pulled out 3 transactions from that bank statement, the ending balance wouldn't be correct, right? And so when you go do an actual bank reconciliation, if you've excluded transactions, now you're going to say there's a variance between what is actually in the accounting software versus what the bank statement shows is your true cash balance at the end, right? So
And
typically I like to say avoid those.
if you're using this as like a profit and loss statement, and if it doesn't balance to the accounts, the bank statements that you give us, I'm going to question it. Um,
Exactly.
and this just goes back to don't commingle. I mean, of course, stuff happens,
Yes.
but we
Yep.
always just suggest please don't commingle your funds.
Yes.
Okay, so two questions. Please explain the match function more. But
Yep.
then back to Robert. So when I buy a piece of gear with personal money and log it into QuickBooks using a journal entry as an owner's investment, that could be an issue for my LLC, correct? And when
No,
I
it
buy the
wouldn't be
piece.
an issue. It basically comes down to how are you going to pay for that thing, right? Are you going to pay for it personally and reimburse yourself from the business in the future, or are you going to pay for it personally and just contribute it to the business, right? So if the business is going to reimburse you for it, what I typically recommend is either one, just transfer money out of the business account to yourself, and we'll call that transfer an expense reimbursement or categorize it based on the gear that you bought, right? And call that the expense, right? Even though it's not going to the true vendor, it's like basically skipping over you, right? So the business is paying for it, but you paid for it, and then the business is reimbursing you for that payment. Same if you have a job and you go do, you're traveling for work and work pays for all your meals. You paid for the meals, work's just reimbursing you. That's the same concept here. So the journal entry would just simply put it into the books if you're not transferring the money kind of within a week or so. A lot of times I'll do this for one of my companies. Me and my partner will put on a lot of miles throughout the year and we'll pay for all that gas personally. And at the end of the year, we have a mileage log of what all those miles are. And we'll make a journal entry at year end that'll say, okay, I'm owed $1,000. He's owed $1,200. And we'll have, this is Drake's shareholder payable. This is what the business owes to me, because those were miles that we drove for the business. And then, we'll either write ourselves a check at the end of the year for those miles, or we'll pay it out maybe in the next year when cash is more available, or whatever makes the most sense. But that's how we're actually recording those contributions. Now, if you buy a piece of equipment with personal money and it's going to be used inside the business, what you would do is either that method where you reimburse yourself, or you can just say, hey, this is an increase in equity in the business. I'm contributing an asset, and the credit on that side would be an equity contribution. So kind of two different ways you can do it. It just depends on, do you want the business to pay you back for it, or are you content with putting more capital inside of the business?
He said, thank you.
Yeah, no problem. All right, so we're going to move on from this. I want to make sure that we hit up all 5 tips. This next one will be shorter, and if we need to come back to this at the end, we definitely can. So the next tip is apps. So apps are a great way to integrate some of the other softwares that you are using into QuickBooks. Like I said earlier, QuickBooks is the industry standard for accounting softwares. It does a great job overall, and it actually has 80% of the market share for an accounting, of all the accounting softwares. It owns 80% of that market. And so because of that, there's a lot of other softwares that are trying to plug themselves in because they know so many people are utilizing QuickBooks. So some of the things that they're really, really good at are like time tracking softwares to help with payroll. One weakness that QuickBooks does have is its inventory tracking, but there are a lot of good softwares out there that have really good inventory tracking. Like specifically, if you sell stuff on eBay, or you have a Squarespace set website, or you're selling things on Amazon, those can have really good inventory tracking softwares. And so if you're utilizing that, those typically link fairly easily to QuickBooks. Now, I will say some words of caution on some of these apps is you do have to be a little bit tech savvy when you are doing some of these. Sometimes the links break, and sometimes there's just a few different headaches that can come with it when you're integrating some of these. I know I work with a bunch of contractors, and they use a CRM system called Jobber that helps them schedule out all their jobs. It's their invoicing software. It's where they hold all their customer information, and it links well with QuickBooks. But the issue is is the transaction flow. So sometimes they can see deposits that come through on Jobber, and Jobber then sends that into QuickBooks. And now QuickBooks shows that it has an undeposited fund. And so if you're not matching up those transactions correctly inside of QuickBooks, it can create some duplicate transactions and create some headache that way. So, but I will say, if you haven't ever looked at these, there are tons of different good apps out here that connect really well. And so take some time and look through some of these, and maybe you're utilizing some of them already, or maybe there are some good opportunities in here. One that I know, QuickBooks Time, a lot of people use it. It's got 9,000 reviews. It's kind of a great time tracking software. Bill.com is another one that some of my clients will use for paying their actual bills, and all that AP then integrates into QuickBooks nice and seamlessly. So these can be another great place with your, especially very techie and using a lot of different softwares. QuickBooks can kind of be a good central housing place for all those things, and they can talk really well and seamlessly integrate your business into kind of one platform and make it run a little bit smoother. So something to always look out for is some different apps, and there's thousands of apps. There's all kinds of different categories, and make sure to find one with some good reviews. Some are paid, some are free, but again, some good integrations here. So next, we're going to move on. And again, I think if we have questions on apps, I'm not an expert specifically on any specific app. This is kind of something I just wanted to show you guys. So I don't know if I'll necessarily take questions directly on, is this a good app or not? But it's something I think that you guys can look into and kind of read some information on how it works. And I just wanted to make sure you guys kind of saw some of that. So the next piece is our reports. So like we talked about earlier, banking does probably 90% of our heavy lifting. Reports are going to be that 5 to 10% remaining inside of what you're actually utilizing from the information you pulled from the banking. So one standard report that everybody's probably looking at is their profit and loss, right? So we'll open this up and we'll look through this report a little bit. And we can see Craig's design and landscaping service. He's got it from January 1st to February 1st. So, really a month in 2022. It looks like he's done about $4,300 in sales, and he's had expenses of about $3,800. So he's made about $111 in profit. So we're not talking crazy money for Craig in 1 month of 2022, but he's a landscaper. It's a slow time of year for those guys. So now, reports are great. They're easy. They open up. They're standard. But I like to look at reports over time. And so the profit and loss report is a time-based report, right? So we can see it's at the beginning of the year to this date, right? So it's encompassing, information over time. The balance sheet is more of your point in time report. Go ahead, TJ.
Okay, Marie said, on reports, I try to do the projections for the next quarter in the profit and loss report, and hers does not show anything. Question, I can see the past, but not the future.
Yes, right. And so the projection is just kind of based off what QuickBooks thinks your business is going to do, right? So if you don't have tons of data in there, or you don't tell it information about the future, all it is trying to do is come up with some estimates on where your business is actually potentially going to go. So some of those projections, like in my business, a lot of my clients are on a recurring monthly fee. And so QuickBooks knows that based on when my fee schedule runs each month, it's going to produce X amount of dollars in revenue. So it's kind of basing it on some of those types of things. And it's building, again, with some of that AI technology, is it saying, okay, on average over time, you're bringing in, let's call it $10,000 a month in sales. So we wouldn't expect anything dramatically different this coming quarter, right? So we can project out maybe this next quarter is going to have, $30,000 in sales. If on average over the past year, you've averaged about $10,000 a month. But you kind of it's learning some of that, and it's also putting in some of that information to kind of help it learn and project some of those things out. But I would say that's not a great tool inside of QuickBooks to help manage and look forward in your business. I would utilize your profit and loss, and I'll actually show you a custom report that I think is really, really helpful to evaluate some of those things. So this profit and loss report's great. It's over this course of a month. But when you start looking at, the course of a quarter or a year, you can lose some of the valuable information that's in this by just looking at these numbers, right? You see this guy, Craig, he's done about $10,000 in sales from October 1st to February 1st. But that doesn't really tell us the full picture of what his business is doing. And I think this report's fine. It's great for the end of the year. But I like to customize these reports a little bit to give myself and my clients a little bit better understanding. So to customize your reports in here, you go up to this customize button and you can change dates and things like that over here. But I like to just go up to this customize, and I have the dates that I want to see. I have from October 1st to February 1st. And then what I like to do is I like to change my columns from the total only to months. Okay. And then I just hit run report. What I think for me and my businesses that I work with and that I own personally is this tells and paints a better story about what's actually going on inside of my business, right? So I can look at this and go, man, our landscaping services really sucked in October, but man, they started to pick up, the next few months. And let's actually have a thought about why that is. Let's put some effort into it. Well, in October, we were just starting out and, we only had a week's worth of work. So our landscaping services were down. Okay, great. But this paints a nicer picture. You can, as you build this out over time, I like to look at this on a 13-month basis. Craig doesn't have that much information, but if you could in your business, go back to January of 2021 and see all the trends in the different accounts over the time of a year and a month. And really you can see, okay, did we grow from last year? And then where are some of the cyclical nature inside of our business? Do we have a little bit of a downtime in the summer or in the spring or whenever? Or you can see some of those patterns as you build this report out kind of over time. And I think it does a better job of helping us paint a picture of where our business is at, and helps us to evaluate, like, man, why is pest control at minus $100 here? Do we give a big discount on pest? Like, it helps us to be able to talk through some of those questions that we have in our business with good information in front of us. So this is what we're doing with customize. You can do this really with any report by just going up here and customizing it. You can change different filters. You could filter it just by customer, just by vendors. If you sell different products or services, you can filter those out. You can change your header and footer. Usually I don't play with this. It's typically pretty good, but if you wanted to, you can play with that. So you have a lot of different customizations in here. Now, let's say you built out this beautiful customized report and you go, and the next month you get into it and you're like, man, what did I all do to edit that report to make sure we had good information to view? You can go here and hit save your customization, and you could do profit and loss. We'll call this one by month. And if you save this customization, you come back to your reports tab, there is this tab up here called custom reports, and you can open this up and it'll pop that report back up for you. If you want to change your dates, you can, but that's how you save kind of your report that way. So that's the basics on the reporting side. A couple other tips, as you can see here, these reports are, QuickBooks does a good job of kind of sectioning off like reports. If you find reports that you typically like to look at, all you have to do is hit this star button and they will pop up here so that you can quickly access them and view them at any time. Maybe you quit using the balance sheet comparison, you can just unclick it and it'll go away. But if you have some set reports that you utilize kind of on a monthly basis, this is an easy way to just quickly pull them. The other thing I'm going to talk about on reports too, before we kind of move on from this section, is if you own a business and your accountant is asking for a trial balance. I just want to explain that we're getting into the tax time of year. And so they may be asking for a trial balance report from you. Basically, all a trial balance is the balance sheet and the income statement in one single report. This can be helpful when you're preparing taxes to make sure you're getting all the accounts in here. So if they ask for this, give them this report for last year, and you can just simply go down here, click last year, run report, and print this off and send it over to your accountant. But this is a trial balance report. Most CPAs, when they're preparing taxes, especially if you have a business tax return, will want this type of report so that they can see your balance sheet and they can see all your income statement items as well. Let's move on. So we're going to kind of, and any questions real quick, we got about 15 minutes left in our hour. Any questions on the reports or anything like that?
This wasn't on reports. This was, I think, on the, hold on. Can you quickly run through a tip for bank reconciliation? The match function, for example, I do not fully understand how to optimize its usage.
Oh, yeah. We'll jump back to this really quick. So matching is really effective when you're utilizing QuickBooks to actually cut checks and things of that nature. So when you're actually producing like invoices in QuickBooks, or you're putting in bills into QuickBooks and then paying them through QuickBooks, that's where this match feature comes into play. So like we'll take this transaction, for example, here. We must have cut a check or noted that we put a check into QuickBooks. Otherwise, QuickBooks won't be able to match it. So we've told QuickBooks already that we wrote check 75, and we can look at check 75 here by clicking on it. We've already told it that we've written this check to Hicks Hardware and that it's coming out of our checking account. And we put in our check number and the payment date. Then when that transaction comes through from your bank and it's pulled into QuickBooks, that's where QuickBooks goes, hey, we see that check 75 has come through the bank statement. We know that we've already written that check inside of QuickBooks. That's what's matching those transactions up together from an accounting standpoint. Because when you write this check in QuickBooks, it's already factoring in all these expenses and where they actually go to. And so if you'd recategorize that check, you would be duplicating your expenses and duplicating your cash going out of the business. So by matching them up, you are essentially matching up the transaction to avoid any duplication. But a lot of smaller businesses are utilizing QuickBooks more on a cash basis, where they are coming in from the back end and seeing all the transactions that come through their bank statement and then categorizing them. As you grow and you have AP and AR and you're cutting checks from your accounting system, that's when you'll see more of this matching. So you'll see that when if you run payroll through your QuickBooks, you'll see it'll match up your federal tax payments and any state payments, and it'll match up the net check to the individuals that it goes out to as well.
Okay, the next question is trial balance does not show monthly data on a monthly basis. It accumulates the balances. Why?
Yes, so let's go look at this. So your trial balance is, again, it's not a point in time report. It kind of is and it kind of isn't. It's the combination of your balance sheet and your income statement, right? And the reason is, if we look at this here, you can see these are all our asset accounts. These are our liability accounts here. And then here we have our equity account. What we're missing, what the balance sheet will have on it, is it will show a net income account. And I can show you that real quick. So it's looking at your balance sheet is showing your assets, your liabilities, and equity. Those will all be equal. And it also includes your net income. That's how the balance sheet and the income statement talk to each other. Any profit or loss, as you can see here, comes from your actual income statement. Now, if we back this up to December 31st to make sure these numbers align, when we look at our trial balance, you will not see an income statement line or a net income line in here. And the reason for that is now we're looking at this is our income statement accounts, our design income, all the way down to this miscellaneous expense. These, when we have more credits over here than debits over here, it means we have a profit, right? So that profit is baked into this trial balance to make sure our balance sheet balances inside of here. So it's just the combination of those two reports. And so it's over the course of a year, because if it was just over the course of a month, we would only have the month information for our income statement. The balance sheet amounts won't change because those are at a specific point in time. But if we make this report only at December 31st, we will only have income statement accounts, revenue and expenses from December 31st. And we want to capture that over the course of the year, because that plays into what our profit is or what our net income is on the balance sheet. Does that make more sense?
Okay, so he says, so is it wrong to reverse the previous month's transaction via opening balance equity account?
Yes, that would not be the right way to do it, because your profit from each month is flowing into the balance sheet. And as of January 1st at 12 a.m. and 1 millisecond, that profit then rolls into your retained earnings. So that's what resets it all for the next year. That profit then gets moved, like all the income statement accounts are closed to zero. And whatever's left, that profit or loss goes into your retained earnings account inside of equity. It happens like instantly at the beginning of a new year. All right, I do want to touch on one more thing. We've kind of hit on some of the bigger pieces. I do want to touch on the 1099 question from earlier. And so QuickBooks has an awesome little feature, and this is fresh in everybody's minds because the filing deadline was yesterday. QuickBooks does have an awesome feature that lets you track and pay and file your 1099s really efficiently, but you need to be proactive about it on the front end to do it correctly. So we talked a little bit earlier when we were looking at, when we were setting up a new vendor, then we looked at, okay, there was that checkbox to put in a 1099. So here we'll go to our vendor contact list and we'll go look at this A1 rental that we just set up. And we can edit this by clicking through and getting back to this vendor information. Let's specifically go down to this track payments for 1099. My recommendation is whenever you get a new vendor, before you pay them or write them a check or whatever for their first time services, is get a W-9 on file. A W-9 basically just tells the business owner that this is their name, this is their address, this is their social security number or EIN, and it tells you if you need to file a 1099 for them or not, right? If they're an LLC that's taxed on their personal tax return, you do have to file a 1099. If they're taxed as an S Corp, you do not have to file a 1099 if you pay them over $600 in service. So by setting this up on the front end, it saves you a ton of work, in January to go track down all these people that need to pay you money or that you need to write a 1099 to at the end of the year because you have a compliance requirement to do so. So by adding this information, QuickBooks will track all payments to these people. And at the end of the year, all you need to do is go into this 1099 filing and you hit continue to 1099s. We don't have all their information, like we don't have their tax ID or their phone number, but it'll go next to your accounts. So if you code all your contractor payments to an expense account called contractor, it'll pull up all those individual people that you've paid. And if you've saved all their social security number, EIN information, it'll fill out all of the 1099s for you. It'll go through QuickBooks and it'll say, okay, over the course of a year, you wrote this person 10 checks. We'll sum all that up for you. And we will put that information into the 1099 form so that it's easy for you to file and just take away some of that, compliance aspect to it. And it's a great feature. Most people don't utilize it correctly, but if you do use it, it can be a really nice tip and really save you a bunch of time and hunting people down at the end of the year and going through the compliance aspect that is 1099s. So nice little tip. And if you are setting up new vendors, I highly recommend it. Again, if it's a vendor though that you're buying products from, you don't need to issue them a 1099. It's for people that are doing services for you. Those are my biggest tips that I have for you guys. Now, my final point here, and I'm going to kind of quit sharing my screen, is just kind of talking about some of the importance of having good financial records. And we've kind of talked about this a little bit throughout this presentation, but one thing I want to kind of drive home is a lot of small businesses are not utilizing good data to make decisions inside of their business. And so accounting doesn't always seem fun and sexy to do, but it really helps provide good insight into your business. And it kind of accomplishes two things. First, it makes this time of year tax preparation and things like that a breeze. You're not going back and looking at transactions from February and going, did I buy that thing on Amazon for business or was it personal? That's all taken care of. We have good information to work from to dump into the tax return to make that process as seamless as possible. But the second thing I always like to say is is it really gives you accurate information on a monthly basis or a weekly basis, however often you're doing it, to make really good decisions in your business. So think back to when you were an employee and you had your annual review, and you sit down with your boss and they go, you were really screwing up 9 months ago and you kept doing it all year. You should have fixed that. And it's like, well, I wish you would have told me 9 months ago that I was screwing up and wasn't doing things right in my job. Having good bookkeeping is the same thing in that scenario. Like, let's say March gets rolling along and you're like, oh, we'll push this off to the summer. You could be making big mistakes inside of your business, or not necessarily big mistakes, or making problems that you could be making more profit from. And if you're not evaluating that information, you're not able to pivot quickly from it, right? So if you were looking at your finances on a monthly basis in early April, you saw that March was a crappy month, and you went, okay, these are we've evaluated some of the things that we think in our business are really putting us behind and not making us do well. Let's pivot from those things and go try these new things out to make sure that we can continue to make money. Having that information in front of you can really be a good driving force to help you be able to pivot quickly. Or if you're doing things really well, what did we do in March that really helped boost our sales or drive profitability? How do we duplicate that or put more time and effort into that specific thing to really help drive profitability and make sure we have the best year possible? Because once this time of year rolls around, there's nothing we can do to fix mistakes that happened in March of last year. That's over, that's done with. But if we would have seen it early in April, we can adjust quickly on the fly and make sure that we're fixing some of those problems that could happen throughout the entire year. So it's not always the most sexy thing, but it really can help drive profitability and really make your company kind of get to that next level. And secret tip for you, most of your competitors aren't doing it. And so this is a great way to get a step up on your competitors and be able to pass them pretty easily, or have just an advantage inside of your industry.
Absolutely. I know a lot of you are current clients and you hear me talk a lot about financials and, no commingling funds, trash in, trash out, or, no matter what you do, just get started.
Yep.
I know at first when you set up QuickBooks, it may take some time because you have to teach it to see those reoccurring expenses that, may be coming out of your account. But once you get it done, honestly, it's really, really easy. Um, and I know I say this a lot. I do prefer QuickBooks because it's just easier to read. But even if you use Excel or no matter which one you use, do something.
Do
Um,
something.
anything, because as Drake said, this is one of the ways to set yourself apart from your competitors. It's a way to plan for the future, to see mistakes, and it's also a way that you can pivot your business. Just and of course, I have a few programs called Always Ready. You always want to be ready. If you stay ready, you don't have to get ready. And the pandemic, I'm sure, has taught us a lot about staying ready. I know it's 1 o'clock, so I'm going to go ahead and thank Drake for spending this time with us. I know there's some extra questions out there. We will share Drake's information in the email so you can reach out to him and ask those questions. Thank you to everybody on this call. This has been an amazing webinar today. So, is there a QuickBooks for total? Okay, sorry. So super engaging. Just to take a quick second out to tell you about some of the upcoming programs. This Friday is the story of, and the speaker will be Tafiq Shah. He is the owner of Lola's Fine Sauces. I mean, I think we've seen those hot sauces and sauces everywhere. So you'll be able to hear his story, the story of growth, the challenges he had to overcome, some of his successes. Um, Listen to this one. Come and attend this session. And then Dream Builder starts on February 24th. It's an 8-week business planning course that will help you understand the ins and out of owning and operating a small business in Iowa. It'll help you create a thoughtful business plan, but you'll also work with subject matter experts. Did I ask you to be a part of this one?
No,
I think
I'm
I was
more than
saving
willing
you.
now.
I save you for the good stuff. But So, of course, you'll have the speakers, your cohorts, um, but it will provide support as you build the foundation to launch your business. If you would like more information, feel free to check out our website at www.theiowacenter.org. And with that, I will close with my piece of advice for us all, which is love what you do and do what you love. Everyone, have a great afternoon.
Thank you very much, guys. And if you have questions, reach out. I'm more than willing to help you guys out. So
Absolutely. Thank you.
thanks.